This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the gold market. Well guys, situation slightly has changed during the previous couple of weeks because market in fact in the long-term perspective stands very tight. So if you will take a look at the monthly chart, you'll see that April and May months shows a very small trading range, and on May this range even smaller. And to shift the equilibrium on the higher time frame charts, market should pass through the significant levels, or precisely speaking, to erase the bearish grabber that has been formed on the monthly time frame chart, and that's still valid and still suggests the taking out of the 1180s area. Market should move above these highs, above the approximately 40 and even area. To trigger this pattern and open road to the deeper levels, to the 100 bucks per contract rally to the downside, market should pass through the 1280 1260 area, because 1260 is the monthly pivot support one area, while 1280 is the support that we use for as the edge for short-term sentiment. So if market will pass through this level, it will erase opportunity of further upward action here. But right now we see that market still holds around this area, and that's why it still has the chances to show some upward action. Since this area is very wide, so from 14 even to the 12.6 area, it's very wide. That's why market could form a lot of different patterns inside of this area, and that will not break the equilibrium of sentiment on the higher time frame chart. So any fluctuations inside of this area will not necessarily vanish and destroy the bearish pattern. It just could postpone the downward action maybe, but will not destroy it. That's why if market will show any upward action here, it absolutely doesn't contradict with the higher time frame chart, and doesn't suggest that this pattern will be destroyed, or if that the sentiment has shifted to the bullish side. For that purpose, we need to move above the 14 even area. Well, that's why in the nearest perspective, we will focus on daily time frame chart, on the intraday charts, because currently we can't take any position on the higher time frames charts due to the reasons that we have just discussed. Since market stands inside of this range, and currently it's unclear what will happen. We need to see the confirmation of the breakouts by the breakouts of the significant levels to choose the long-term direction. In the short-term perspective, we have this consolidation that we can't treat as some reversal or some real upward continuation. It looks mostly like the retracement after the downward action. Still, we can't exclude the possibility that market could show another leg up, especially if market will hold above this area. So this green line is the 100-day moving average. We have mentioned it in the fundamental part of our weekly research, so we can see that it really nicely holds the current action. And if market will hold there, it will keep chances on the possible bounce. That's why in the short-term perspective, that will be the core of our trading plan in the beginning of the week. The first step of our trading plan is the monitor of the action around 1280 area. Unfortunately, guys, we didn't get the bullish grabber here because market has closed below the MACD predictor, and trend by the MACD has shifted bearish. But still, this doesn't exclude the possibility of the upward continuation if market will form here something interesting. So let's take a look at the 4-hour time frame chart. On the 4-hour time frame chart, that's the pattern that we could get, and this pattern is the 3-drive sell. So you can see that is the first drive. You can see that the second stands at 127 extension of the first drive, That is the retracement of the second drive. If market will move slightly lower, then we will get the matching of the extensions. Of the first drive is the 161 action here, and of the second one, 127, also stands in the same area. And this action to the downside is possible because if you will plot here the MACD predictor, you will see that 3 recent candles here. I don't have it on this chart, just to keep the pattern clear, but you'll see that this is bearish grabbers that suggest the taking out of these lows. And that's why market still could show some minor downward continuation in the beginning of the week, and that is what we would like to see. But market should hold above the weekly pivot support one, because any breakout to the downside will be the sign of the weakness, and we know that if market if market passes for the weekly pivot support one, it could indicate the starting of the bearish trend, because usually retracement holds by the weekly pivot support. Well, that's what we will be watching for in the beginning of the week. First, small move down, and it will be perfect if market will form here some reversal pattern. Maybe this will be reverse head and shoulders, maybe this will be the butterfly, maybe 3 drive by or something of that sort. As soon as market will form it, and if it will form it, it could become the starting moment of this action to the 1325 area. That's our major trading plan for the coming week. And in fact, guys, currently I do not see anything else on the gold market. It's not really a big choice of the patterns, but this pattern is really interesting and promises significant action to the upside if it will be realized by the price action. If market will fail to hold here and form something reversal in this area, especially if it will move below the weekly pivot support one, we should not take any long position, because that could become the sign of the downward continuation, and that really could lead to the major breakout to the downside that would open road right to the 1180s lows, because long-term sentiment now still holds bearish. And in general, guys, fundamental picture absolutely doesn't support any significant upward action, because we have the stable demand on the spot market, because currently the bearish seasonal trend. We see that inflation is anemic. United States continue the quantitative easing program that makes the perspective of the inflation growth even smaller. So the economic data on the United States improving. Well, that's all these moments absolutely do not add any optimism to the bullish rally on the gold market. The one reasons for significant action to the upside I see with the possible unexpected geopolitical tensions. So they could trigger significant jump to the upside, but usually such sort of the jumps have a limited potential. So they could give the impulse to the market within the 1 or 2, 3 maybe days, but after that such impulse usually fade out. So that's why we can't count right now on the significant long-term reversal. But action to the 1325 is still possible, because markets now is still holding above the crucial levels, significant levels. So here, for example, on the hourly time frame chart, how it could get started. So this is possibility for the butterfly. You can see that 1618 extension of the butterfly stands very close to the weekly pivot support area. That also could become the part of the reverse head and shoulders, for example. And this pattern could put the foundation for the possible action to the upside. That is what we will be watching for in the beginning of the next week. So let's see what will happen.